And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit. So you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, November the 18th. I'm John. Thanks for trusting me with your time as always. We're going to be searching for good context, good risk management, and infinite patience in our trading today. Eco numbers this morning, 7:30 Thursday, as usual, the jobless claims numbers came out. The initial jobless claims, they were looking for about 260,000, a little bit higher, 268,000. Continuing jobless claims, they were looking for 2,120,000, came out a little actually better at 2,080,000. Both of those numbers have higher revised numbers from last week. Philly Fed also out this morning, 9 o'clock. Leading indicators, or as we used to call them in the pit, misleading indicators, 9:30 nat gas, and there is a plethora of talking Feds again today. Plethora is a industry term, just a few talking Feds. As far as other things, U.S. stocks set to open higher this morning after NVIDIA earnings came out yesterday, as well as some decent retail returns yesterday after the close. Crude prices have weakened after a surprise drop in inventories, but on a potential agreement or agreements, including China, of coordinating or of a coordinated release of strategic petroleum to just kind of help stabilize prices, if you will. Strategic Petroleum Reserve. Boy, that's hard to say this morning. I should have warmed up this morning. As far as earnings this morning, Alibaba came out missing on both. Macy's came out also, beating on both, and we're looking for Intuit after the close. It's the major one, and then of course, we've got some more retail coming out, including Ross Stores. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Looking this morning at the VIX, still hanging around that upper 16 level, 1688. No major changes there. Dollar index still hanging off that 16-month high, 95.78, off slightly from yesterday's close. And then the 10-year yield of 1.59%, slightly higher than the close on yesterday. As always, got to say good morning to everybody. Zerain, good morning. Clem, Chris, George, Frederico, Andre, my brother Rick, love you, brother. Drew, good to see you this morning. Nelson, Brian, George, Felix, Ricardo, James, Shaw, Isaac, Alois, Jason, Wen, Pascal, Albert, Rob T, good morning, and good morning to you, Vince. As a reminder, next week, metals, treasuries, interest rates are going to be rolling over, as well as nat gas. Now, nat gas and crude oil still are, already and still being affected by rollover information. It makes volume a little bit blurry to kind of keep track of. Open interest a little bit blurry to keep track of. Not going to be here next week to remind you, so think about Tuesday nat gas, and I think Wednesday the treasuries and metals are due on Wednesday. Watch the volumes. Check volumes in the morning. If the volume is even or higher in the future month, you're going to move on to that next month. In gold, it's going to be the February. And in nat gas, of course, that's going to be January, as we are in January crude right now. So again, there won't be any forecast recap or coaches' playbooks next week. We're going to be taking a little bit of time off from that. I know I'm going to miss you, and I hope you miss me a little bit. So tomorrow's forecast will be it for a week, and looking forward to taking a little bit of time off. I suggest you do the same. I think we're already seeing some of these markets slowing down a little bit for the holiday week next week. Funded trading not allowed next week anyway. Yep, that's correct, Spencer. And hey, good morning, Dr. VJ. All right. So we've got the charts all ready to go here. Why don't we jump in? See what happened yesterday with that opening range in crude oil. Maybe we'll get the chance to watch that again this morning. But here are the charts. All right, so here's the daily in crude coming out of rollover. Nat gas coming into rollover. We have a check of and a test below weekly kickoff low, which in crude oil is 77.25. We had our friend Nemo talking about some confluences that he was looking at down around yesterday's low and perhaps even this morning's low. Long liquidation has been indicated by open interest, losing 16,000 on this down day. But again, that's going to be somewhat rollover blurry. We're still seeing, what's going to work. We're going to see expire. What are we going to see rolled over? So again, this is a little bit blurry. I'm not looking too deeply into the fact that we lost 16,000 in open interest on this move to the downside, as again, it is in rollover. It's just hard to be confident in volume and open interest during rollover. We were set to open below weekly kickoff low. That has now changed. We're going to be still looking at this weekly kickoff low as potential support. I like it because it lets me limit my risk. We do know that there is some possible talk of agreement unilaterally of releasing of strategic petroleum reserves. So we got to keep an eye on that. There's a little bit of headline risk for the rest of this week, I would say, in regards to that. Take a look now at the 30-minute chart. Yesterday morning, we're going to take a look at this on the 1-minute chart. Yesterday morning, the market opened, leaving the opening range at the low of the session. It provided about a 40-tick opportunity, but as the market kept returning to and trading down below, we started putting up lower highs and lower lows coming back through that opening range. And once we accepted back below that opening range, below the previous day's range, maybe even below last week's low, that's when the acceleration really came into the downside. So we did not close below that inflection level, that 77.25 weekly kickoff level. Settlement is 77.55. We got a little too short down below that this morning, and we're opening back in range and maybe even back in value. So this is presenting itself as rejection in regular time frame as yesterday and in overnight time frame now. We got too short. We didn't like what we were seeing down there. We're back in range, back in value. That may mean we're going to try and stay patient this morning and look for better trade locations as the day goes on. All right, so here's again the 30. Let's take a look at real quickly here at the 1-minute chart that we were looking at on that opening range trade yesterday. So here was the opening range. Remember, keep in context, this is a 1-minute chart. I don't even look at these only to find the opening range. So the opening range trade was here. It broke out above the opening range and in very short time frame, one time framed higher. Came back into the opening range, could not put in a higher high. Back to the opening range, takes out the low of the opening range, couldn't put in a higher high. Once this market came back down to this, came up, this was a little bit of a chop shop through here. But once it really found acceptance below that opening range, that's when the acceleration really started to come into the downside. Now we're going to move on to the S&Ps right now, and we're going to come back to the crude oil to see if there's any decent opportunities off the opening range. And again, because of the situation it's in right now, coming back into range and back into value, I'm probably going to be more cautious about trying to get into an opening range trade unless something changes between now and then. S&Ps. Volume and open interest. Well, let's go to the daily. Volume and open interest stay higher on an inside day. Okay, an inside day is we didn't take out the low of the previous extended trading hour session, nor did we take out the high. We did increase a little bit in volume. New York Stock Exchange was about 2% higher also than the previous day. And we added 5,000 in open interest. There's still money coming into this. I'm kind of viewing this as a pennant formation. We've got some pretty decent even highs, and we've got higher lows. The market, it does seem to be coiling in that regard. We're 4 days in to an area of balance, and I believe that indicates more short time frame control than longer time frame control. And I will look for the longer time frame to come in as we get closer to weekly kickoff high, or if we get close to breaking this loose trend line. This is not a great trend line here, just showing that we're putting in higher highs. 47.10 horizontal resistance, potential short time frame support on this trend line. LOS, I define the opening range as 1 minute long. 1 minute. There are others that look for 30 seconds. I know some that look for 5 minutes opening ranges. It leaves some pretty wide opening ranges and leaves you open to greater risk. Take a look at the 30-minute. So here's our kind of trend line here. Okay, settlement in the S&Ps 46.86 quarter. Put that on your charts. Very range bound day yesterday. Very range bound. We did take out the initial balance at one point, but we failed and we just kept rotating. So we opened, we went lower, took out the high of the initial balance, rotated back to low of value, back to high of value, back to low of value. Finally, we closed. So there's not a whole lot of change going on inside this, except for the fact that the market was using up its ability to facilitate trade there. The longer we stay here, the lower volume is going to go, and the more likely it is that the market is going to auction to a new level to facilitate more trade. Okay, so we've got overnight longs, settlements down here. All of our overnight activity was to the long side. We've peeled off just a little bit. It looks like we are at risk of opening with a gap, and if we open with a gap, gap rules. If we can't close the gap, we're going in the direction of the gap, which would have us looking for longs to the upside. If we can close the gap, that may be enough to scare our overnight longs into giving us a potential better trade location if we are in the frame of mind to buy weakness. We come back to settlement, come back to this trend line, come back to this area down here. I think there's some pretty decent fish there. Okay, so let's go. We've got about 10 seconds before crude oil is going to open, and let's see. So just a kind of a reminder of where we are contextually. We're at a weekly kickoff level. This is an important inflection level. We're bordering coming back into value or potentially rejecting value. Here is that 1 minute chart again. Here we sit, brokenhearted, came to trade and only charted. So we're going to let this play out. We got about 30 seconds. It just looks like we've got a little bit of confidence to the upside here, at least initially. Here's the high. Here's the low. And where are we? Here is our range. Now we watch to see which side it penetrates first. If we're going to be taking the opening range trade, we put a stop in 1 tick above to get long. We put a stop in 1 tick below to get short. And then our stop is already in on the other side. Typically, if I'm going to do that, I'm going to move my stop a few ticks away from the opening range, just because sometimes the market will come back and take out those little stops that we know are there. So we've broken out to the upside. We're seeing some pretty decent legs to the upside here, at least initially, bringing price back into range and inside value. So that means there may be decent opportunity here for price to come back up and do a whole bunch of repair from yesterday's emotional downside day, as long as we can hold that opening range. Now, if we can't hold that opening range, it would be a cinch for a test of weekly kickoff low. But at least we've got that early reference, and that opening range reference the high of it high of the opening range 77.74, low 77.62. So a 12 tick opening range, creating about 15 ticks of risk. And if the opening range remains the extreme and we catch that move, we can, there's no telling how big that trade can be. Already coming back and testing and taking out the low of the opening range. Opening range now moot. Let's look into the Nasdaq now. There's no guarantees anything works all the time. Isn't that right, ladies and gentlemen? All right, the Nasdaq. Daily. Short time frame. One time framing structure remains. It's a pretty good trend to the upside. We get a pullback that ends up acting as a bull flag. We break out the bull flag. We are now back to one time framing to the upside, which is something we have not done in the S&Ps. We've got our all-time high in sight, 18,448.50, that all-time high right over here. Volume was okay yesterday, but open interest kind of moot. We added 150 contracts yesterday, so not seeing a whole bunch of money coming in, although we are still one-time framing higher. So we're just kind of up against last week's high, the all-time high looming just above that. What are we looking at for the 30-minute chart? Okay, settlement. All the way down here, 16,311.50. 16,311.50. Put that on your charts. All of the overnight activity has been trending to the upside until this point, getting a little bit of consolidation, which can do a pretty decent job of evening inventory. So are we going to open with a gap, or are we not going to open up with a gap? That's really what we're looking at here. If we're going to continue to the upside, we're going to need help from the regular trading hour session, from traders in the regular trading hour session. We got a whole bunch of short time frame longs here that are counting on that. If it doesn't happen, they can bail and give us better trade locations to buy weakness We gotta pay attention to that. We also want to make sure that if we do get an inventory adjustment, that we don't think it's going to be the all-time high. A lot of traders think when they get a decent inventory adjustment trade in this form, that this is an indication that a new trend is beginning, and we may be far from a new trend to the downside beginning. As far as nodes from yesterday, there's really only one, and that's the point of control. There was such a range-bound day yesterday that the only thing that really sticks out is that point of control, which is approximately 16,314. Do we have points below that we could be looking for? We certainly do. I mean, yesterday, another high volume node down here at 16, let's just say that's 16,240. We don't really have any naked points of control that have been left behind till we get to considerably lower. So, if you're looking for points to trade back and forth in from high volume node to low volume node, you're not going to see those today unless we can kind of take out the point of control here and then come down and check this high volume node here. Again, a lot of this is going to depend. Are we opening with a gap or are we not opening with a gap? What happens on the open? Do we attract buyers in the regular trading hours, or do the buyers back off, let the short time frame inventory adjustment happen, and start to look for opportunities as we get better trade locations off of that inventory adjustment? Gold. Pretty interesting opportunity for us in gold this morning. This is the daily. We're in our fifth day of range-bound activity here. $100 move last week. We were just kind of digesting that. Instead of getting a deep pullback, the market is, as I like to say, the auctioneer is pandering. We got a healthy auction to the upside. The market, the auction has stalled, may not yet be over. The auctioneer is again still pandering because we are range bound, and I'm going to be using range bound rules to trade this until proven wrong. Up near the highs, we're going to look for opportunities to sell unless we can get a breakout and some decent volume and participation. Then we go with it. Along the lows here, I'm going to be looking for longs, because this has been proven to be too cheap in recent activity. The range-bound rules say fade the extremes, go with substantial breakouts. Last week's high looks a little bit pivotal here for us, right? Here's Monday, we looked at it. We didn't do anything. Tuesday, we looked at it. Yesterday, we tried to look at it. We looked at it overnight last night. What's the 30-minute chart look like? Okay, so I marked the high of the opening range right here. It was 1866.90 was the high of the opening range. If you took the opening range, you got a pretty decent 60-70 tick move to the downside, which took us to a point of control from the overnight over here. That looked like it was a pretty decent opportunity for us. The market came all the way back, took out the high of the opening range, did not close this 30-minute bar above it. Now the high of the opening range acts as resistance again. We had some pretty decent shorts, took out those shorts on the way back. And now, the market really in range from yesterday. I'm going to stay patient now because this would be probably some pretty interesting trade location. And the high here from the regular trading hour session also pretty good opportunity, I think, for finding some fish. But anything in the middle, I'm going to try and avoid. I'm going to avoid the juicy middle. Right. The euro. Wow, what a move in the euro. Holy cow. Well, the dollar strength certainly did its thing to the euro, but It looks like we've got a little bit of a blow off low here, don't we? We pushed lower and we could not close. All of the bars, well, most of the bars on this move down go from high to low for the entire session. That didn't happen yesterday. Yesterday we looked lower and we rejected below weekly kickoff low. Open interest dropped yesterday, 3,400. Volume was pretty decent, but this is a kind of a reversal pattern. Okay, so take a look at the 30-minute chart. So here's our look in the overnight, that deep look that was rejected yesterday, a deep look that was rejected. This area has not been accepting as price, as value. Value is now going to be starting to push perhaps a little bit higher. We have opened with a gap. We closed the gap, but the gap can also become supportive. We have some overnight longs here that have reconciled back to close the gap, but is that good enough? Do we got a little deeper move to the downside? Settlement, which is 113.20, would be an interesting level, very close to our overnight low if we get the opportunity. Looks like we've been unsuccessful so far at rechecking this point of control in regular trading hours, and all of our visuals, recent visuals that is, are now above market. We've got point of control, point of control, point of control. This move to the downside left a lot of unfinished, unturned stones, if you will, above the market. So, are we perhaps looking at a situation where we may be able to buy weakness now? As long as we hold above weekly kickoff low, it's something I would consider trying. All right, let's go into the 10-year. So again, test to weekly kickoff low, couldn't quite get there yesterday. We added 34,000 in open interest on this bounce off the weekly kickoff low, not on great volume, but remember, these markets are coming into rollover, so you're going to see more volume moving into the March contract in the Treasuries, and less in the December contract. We're not ready to move yet, but it's going to happen next week. So volume becomes a little bit more difficult to read, as well as open interest. I'm looking at this move up to the upside as in open interest as buyers coming in against an important inflection level. Take a look at the 30-minute chart. Here's our test. This is not the right chart. This is the nat gas. Here's our attempted tests of weekly kickoff low, unable to do so. Overnight longs got a little bit long, opening in range, coming back into value. I'm going to suggest trying to stay very patient. There's no gap. There's no overnight inventory. And I think we're a little bit perhaps in short time frame control here. 1, 2, 3, 4, 5 kind of overlapping random ranges. Look for better trade location at short time frame levels. Last week's low, value low from yesterday, looks very interesting. Looks like a very interesting spot. Nat gas. Okay, so we have failed to create an island low. We did put in an island high yesterday, but that's typically going to be a more important thing when we're changing direction, a reversal pattern, and I don't see that we're in need of a reversal pattern here. 1, 2, 3, 4, 5, 6, 7 days in range, in balance, short time frame control. Lost 4,400 in open interest on this move to the downside on a little bit lower volume. Interest seems to be leading, at least for now, the nat gas. Remember, it rolls next week. So all of this is much more blurry during rollover than when we are not in rollover. Here's yesterday, settlement all the way at the bottom, 14.81, or excuse me, $4.816. Overnight's all to the long side, a little bit of a pullback, but continuing this push to the upside. Opening at 8 o'clock, 7:30, 8 o'clock, we see the market bringing opportunity as the day goes on is a greater probability than just glomming onto something really early here. The market opened in range and in value. That indicates, hey, there's very little change in the perception of value. Be patient. Let the market give you some extremes, some parameters to look for opportunity. Here's that island top that we created this week. But again, typically that's important when it's a reversal pattern, and I don't see that we are in need of a reversal pattern at this point in this market. We came from higher. We were looking to put an island low in. Instead, we put a one-day island top in. Go figure. All right. So while we are in range and in value, stay patient. All right, let's get this fixed up here. All right. So hopefully we've got a couple of ideas for context. As always, I thank you for joining me. And Devante, jobless claims being higher than forecast means market coming down? Not necessarily. Not necessarily. The markets take some time to digest. I don't think that the jobless claims miss was that tremendous to where we're going to see any major market state changes. Good morning, Michael H. Jay Powell said rate hike would be tied to employment numbers. A rate hike is bad news for all the debt-laden, cash-burning companies in the tech sector. Yeah, and from what I'm seeing, the major banks are talking about the first rate hike happening sometime next year in September. There's some question as to whether our good friend Mr. Powell will still even be in charge of the Fed. They're talking about Brainerd taking over in February. Is it me, or does CL seem to trend better than ES and NQ? Michael, everything is somewhat cyclical. We can look at the S&Ps or the Nasdaq or the Dow. If we're looking at a long time frame, it looks like the market has been trending for decades. So, everything's in context. The crude oil, came down off of $150. It kind of ranged around $100 for about 6 months, and then we had a big break to the downside where it traded down. Well, last May it traded down to -40. But it's cyclical. Everything has to be in context. There's going to be periods of time when the equities don't do much. They just kind of range. Same thing is going to happen in crude oil. Same thing is going to happen in any of these products. And there's going to be times when there is directional news or directional activity in the market that's going to continue to push price one way or another. So it's all in context. And you may be right. This move in the crude oil, recent move, has been a pretty strong directional move. Is it changing is the question. We've really been kind of range bound for about the last month. Now, in the daytime frame trends that may just be part of a larger balance area, there's always some good opportunity in those. The 5-minute opening range is what you were taught, but the 1 minute makes sense too. Yeah, Michael. That 5-minute opening range, it tends to just create a bigger range and bigger risk. The opening ranges, from the pit days, If there was a whole lot of business to do right off the open, sometimes the opening range would take longer. Sometimes it would be a wider price range. If there wasn't much to do, the market, the opening range could be smaller and, and happen a lot faster. On electronic trading, if I want something to do on the open, I just push this button. Now, of course, there's traders that have a lot more to do on the open, and sometimes they're going to spread it out, sometimes throughout the entire day. But I find that the 1 minute opening range tends to give me decent opportunities with limited risk. And it's very cyclical. The reason why the opening range trade streaks and then goes away for a while is because the short time frame traders recognize, and we're also very, very fast to abandon a strategy that doesn't appear to be working anymore. I don't even like to use the word working. It's going to provide opportunities when fewer people are looking at it. So it's not going to provide opportunities for a while as fewer and fewer people try and use that opening range for their opportunities, the more likely it actually is to succeed. So you get these cycles where the opening range goes, great for 8 out of 10 trading days, and then you don't see it again for 2 weeks. It's because everybody notices, they all come back to you doing the opening range trade. More people that do it, the less likely it is to succeed. And then as soon as they abandon it, we're there thinking, wonder if they've abandoned it yet. And if they have, it can, sometimes, like I said, you can get 8 out of 10 trading days with wonderful trading opportunities off the opening range. And then again, it doesn't happen for a while. So everybody abandons it. All right. Okay, I've been yammering enough here. Hey, Ray, I was just thinking about you yesterday. It's good to see you. Things going all right? You hanging in there? I got to let everybody get down to business here, so let's take our deep breath. Stay humble, grateful, and creative. Be cool, be calm, patience. Get out there and profit today. Trade well. We got the market recap today with Dan, then you won't see him for a week, and then I got the market forecast tomorrow morning, and you won't see me for a week. I was. Of course. Always good, Ray. All right, let's get down to business. I'm going to get down to the proverbial trading pit. Think good things, feel good things, see good things, trade well, and I will see you tomorrow morning. Have a great day.